So building your own infrastructure.
Yeah.
Okay, well, this period we talked about earlier,
Yeah.
between essentially going from zero to owning assets. That period we talked about, so having no liabilities during that period. What you've actually got to do, and it might sound obvious, but what you actually have to do is save.
Sure.
And you have to build your asset base. Because during that period, it's going to be very, very easy for you, for example, to go and take a job somewhere, get a salary every month, and then start signing up for liabilities based on that salary. So the best way to do things is actually build up your business. So work for yourself, build up a business. It can still be done if you're working for a business or a corporation, but it's more difficult. You've just got to live well within your means, and you've got to have no liabilities. So liabilities like we talked about earlier, with mortgages, overdraft facilities, credit cards, taking loans to buy cars, stuff like this. You've got to have no liabilities, and you've got to save. And even if you have to rent, for example, or share an apartment for 10-15 years, you've got to be prepared to do that, and you've got to drop your pride. Setting up businesses, if that's the choice you're going to make, there's a million ways to make $1 million. You can start off small, and you don't have to have hundreds of thousands of pounds, hundreds of thousands of dollars to start businesses off. Most small businesses you can start off with nothing. So if that's something that you want to do, that's the way you have to do it. You have to start small and build this asset base. So during that entire period, going from zero up to owning assets, it's saving and having no liabilities. And in its entirety, what you're trying to do is essentially build your own infrastructure. So you're building your own pension. Now, if you look at the way the pensions industry works in the Western world, so if you look at the United States, United Kingdom, Europe, what's become really apparent in the last 5 to 10 years is that the generation previously who started on the pensions infrastructure in the 70s and throughout the 80s and 90s and noughties, those people are not able to retire properly. So if they can't do that, it means the pensions question or the pensions solution has not been met, because the whole point of a pension is that it provides you income in retirement, and these people can't retire. So pensions infrastructure has failed in the Western world. So whether that's the fault of the system or the fault of the people themselves, it's probably a mixture of the two. But essentially the stats are across the US, Europe, United Kingdom, the annual national average salary in each of those regions is basically equivalent to what an average person's pension value is when they retire. Which means if everybody retired today in the Western world, it would mean that they'd only be able to live in their current living standards for 1 year. And this is why everybody downgrades their lifestyle when they retire or rely on their children to pay for their retirement. That's not something you want to be doing. If you want to be wealthy, you want to be building your own pension, not outsourcing it, but insourcing your pension. So learning how to do things properly. So the pensions infrastructure has failed. Another infrastructure, that you have to be very, very careful of is insurance. Insurance is a classic example where it's essentially a fear pitch. Insurance companies create policies. This can be on anything. It can be on home insurance, car insurance, health insurance. It doesn't matter. Because at the end of the day, it's just all numbers to the insurance company. They create the policies, you pay a premium for it, and they literally hire people, like actuarial mathematicians, to build models to ensure that they never pay out. So, or if they pay out, it's a tiny percentage of overall policies. So insurance claims, for example, in the car industry, the home insurance market, medical insurance, these types of policies, the percentage that get paid out on per year, I mean, it's so small. I mean, we're looking at like 2 to 4% of policies per year. So, you know, the best way to create your own insurance, and it's again pretty obvious, is to build your own infrastructure so you become wealthy. So imagine why do you take an insurance policy, say for accident or health insurance? Because one day you might have an accident, and people live in fear that one day they will, and then they have all these medical expenses that they have to pay. So let's say, for example, in 15, 25 years, you're going to have an accident where you walk into the middle of the road and you get hit by a car, and you're going to be in hospital for a month. Well, the only real way to insure yourself against that is to actually just become wealthy. So if you spend all that time knowing that that could be the case, it's lazy to go and pay for a premium that might, for a policy that may never actually pay out. So insurance is another infrastructure, as well as pensions, that isn't necessarily built for your own benefit. The other one is the whole private debt market, which we keep going back to. So just think about, for example, credit reports and the credit reports companies. Just think how absurd this is. You get scored on your ability to borrow, and the higher your score, the more you can borrow. So the higher you score, and the more compliant you are when it comes to liabilities, the bigger liabilities you can take on.
That's your reward.
That's your reward. It's complete insanity. It's absurd. And if you want to start off on the road to success and build your asset base and build your own infrastructure, these are all the things that you have to avoid. You have to literally do the opposite of what everybody tells you to do. So going back to this point, understanding the function of money, respecting it, having or being indifferent towards building money and becoming wealthy, but wanting to do it because you understand how the system works, and you don't necessarily want to operate within it. You want to own it. This is the way you have to go. You have to build your asset, but you have to build your asset base, and in that period, as you're building, have no liabilities. And it's difficult to begin with, but it gets easier over time, because the key to this, when you're building assets, is actually to generate passive income and cash flow. You want to be making money while you sleep, and it becomes exponential. So it starts off difficult, but it becomes progressively easier over the years. And what's the old saying? It takes 20 years to become an overnight success, but you've just got to stick at it. So build your infrastructure yourself. Build your own infrastructure. It's the only way to go.